overall, it does matter whether or not we're in a bull market or we had a bull market within a bear market, because that means whether or not you buy value in cyclicals or whether you stick with sort of the growth-oriented sectors and the safeties. Where are you on that spectrum?
Yeah, so we think we're in a bull market. We do think that we've ended the last cycle and that we're starting a new cycle. And I think to your point about the Fed identifying the weakness in the data, that's absolutely correct. The U.S. economy, the global economy is still in an incredibly weak place. But I do think it's also very important to acknowledge that markets usually lead the economy, and that a lot of the market's better gains have come in periods where the economy is very weak, but it's starting to get better, and some of the market's worst performance has come in times when the economy is very good, but that data is starting to get worse. So I think the trend in data often matters a lot more than the level. And your point on a rise in case count, I think, is important. I do think that is a real risk that we need to watch over the summer, because I think, as you guys were mentioning before, you can debate about whether or not it would be a second wave or just a continuation of a kind of a plateauing first wave in the U.S. But big picture, looking out, we do think that we are in an early cycle environment, and thus we do not think we're starting a new bear market.
Does it feel logical to you that we are seeing kind of the most beaten up stocks bouncing in the way that they are? I'm not going to get you to kind of comment on individual stocks, but Hertz is able to raise money in the stock market despite the fact that it is technically bankrupt. Does that sound like a properly functioning market to you?
Well, obviously, I won't comment on any particular company, but I actually do think the pattern of performance that we saw over the last month, where you had small caps outperforming, more cyclical stocks outperforming, I think that's actually very normal. That often, when growth is very weak but not getting any weaker, which is where we are, that is often a time when those smaller, more cyclical companies start to do best. In many cases, because they've just done their worst as data was very weak. And so, I think that sort of early cycle pattern I'd actually think is much more normal than it's abnormal. And in some ways, the oddest part about this market was that some of the same stocks that had been leading throughout 2018, 2019, a lot of this kind of large cap quality growth, which had worked in an environment where growth was slowing and yields were falling, well, that also worked as markets were declining, and then as markets started to rise again. So I think actually some change in that leadership is healthy. I think that would suggest, again, a kind of a more sustainable shift in broader market patterns.
Yep.